Good morning, folks, and welcome to my daily technical analysis video for Thursday, the 18th of February, 2021. I have four pairs on watch today, and I'm still in my Kiwi Yen trade, so I shall break these down for you without further ado and then talk you through my Kiwi Yen trade, which I believe is running at just shy of 1% at the minute. So at the moment, pound Swiss is at the top of the list, and we start off on the weekly chart as per usual. And you can see, even on the weekly chart, or hopefully you can see, that the reason I was looking at this is because we have these highs that have been tested multiple times. 1, 2, 3. So this to me represents a high area of value for a sell. And you might think, well, we've broken that area. But we always ask ourselves, how did we break it? Not just if we broke it, which is what the retail traders, with the greatest respect to them, don't typically do. We always ask ourselves how we broke it. And I can see that we've broken this correctively. And if we zoom down to the lower time frames, you'll see structurally as well. So I will do just that. So daily chart, you can see that we got there. How did we break this ray line, this customized ray line that I've made using the info line tool? If you're interested, I use that instead of the trend line tool so that I can have different colors and so that I can rein it in so that it doesn't cut through price. I like to do this. This is something we call pattern separation. It helps us focus on the most recent piece of price action whilst simultaneously being aware of the higher time frame structure, or these liquidity points, as it were. And all I've done is just remove the text from the info line, and then I can have them two separate colors. So we ask us, how did we break it? We broke it structurally, we broke it correctively and structurally. We know that market likes to trade in threes, so usually it will give us more often than not a 1, 2, 3, but we know that it doesn't always have to. We know that we only have to break above this second touch of a structural move such as this, and we're well within our rights to be looking for a sell. I like the fact that we can see the scoops to some extent between the points. That's another tick in the box. I like the fact that we've got a middle section, which you can see even on the daily chart. So we have a first inflection point, we push down, and then we have a 1, 2, 3 wave. That's a good clue for me. I've got the zones marked in. I shall say this only once. Sorry about that. I always do that. The green zone is where I typically take tight flags. I start my zones where the earliest at which a move to the downside might occur. Well, the earliest I would look to get involved, or where a potential move to the downside would begin. And obviously, since we're at this area, it would begin here at the earliest. And then I end it where I see a negative confluence factor, which is typically somewhere either an inflection, either a low or a trend line, which I can see even on the higher time frames. So in this case, the zones end there. And then longer term, if we were to break this trend line, we know that we have a 90% chance of getting 90% of the way to the bottom of a correction, which you could argue was here, but was here, or you could argue, I'm long term, I'm targeting these lows here. I'm seeing this as a, this overall correction. If we break this, then we have a very strong chance of getting all the way to the downside. It doesn't mean we will catch all this move in one go. That's, unlikely. I have done that 2 or 3 times, caught the move all the way to the bottom, and banked, I think, on one occasion about 44.7%, believe it or not. But most of the time, we'll take a chunk of that move if we manage to catch it, and then we'll be stopped out, and then we'll try and re-enter if the market gives us permission, and not before. So I'm going to drill down to the lower time frames. So 4-hour chart, you can see that we're kind of, it's not the highest momentum in the world. We've kind of trickled up. That's another good clue. This, to me, is what we call mass psychology 101. I've seen this quite a lot of times, where we have this standout sort of area of value, just this rough sort of flat area of value, and then we get this structural move where it looks to me like retail traders are just getting stuck in no man's land. They're all buying it up, and they're all getting stuck before potential big move to the downside. I have seen this quite a lot of times since I've been trading this style of trading, which is the Falcon strategy. I'm just going to give it a little plug there. Credit where it's due. So what I forecasted last night, if I just unhide the forecast, we're on the 1-hour chart. I was looking at this and thinking, maybe we've got that kind of, evening star formation. Maybe it's breaking to the downside. But what seems to have happened, as I said, we know the market likes to trade in threes, so it will more often than not find its way to these higher areas of value. So what I forecasted last night, for that reason, because price was moving down, a little bit correctively there, and because we were kind of, in the middle of no man's land to some extent, I forecasted what I would be looking for. It's either a push up to this area. If we get a third touch up there, which is not unthinkable, we're moving down correctively. We know that the market the typical order of things is impulse, correction, continuation. However, just looking at this, what's happened in the night, I'm kind of seeing this as a potential bull flag. So this might not be ready by the end of the night. We might get a something like that and then push up to there. That's how it's looking to me at the minute. So if we did, then I would wait for a push down on the flag, and I would look to get short on the break of the flag. So that's a flag with two clear tops and bottoms, which is visible on the 15-minute chart, at least the 15-minute chart. If it's visible on the 1 hour chart, even better. And so it would have to have 6 to 8 corrective candles in it. What the alternative is, if we get a push down from here, I want to see, after this corrective move down, I want to see a very solid push down and then a 1 hour flag. So that's the same as this. It's not with 3 clear tops and bottoms. It is with 2. This is just how I draw it to distinguish it between a 15-minute flag. So this would be a flag with 2 clear tops and bottoms that is visible on the 1 hour chart with 6 to 8 1 hour corrective candles, and then I would look to get short on the break. That is what I will be looking for from this pair today. So I'm not going to set an alert, because if this entry wasn't here, then I would set an alert up here. I may well do that, actually. No, I'm just going to monitor this one. So we'll hide the forecast, put the zones back on, and then I will blue flag this to remind myself to monitor it. And then we move on to the next pair. Now, I've just placed an order on this one, and I shall tell you why. Just before I went live, I placed an order on... do excuse me, that happens from time to time. Right, I placed an order on this one. So I was looking at this one because we have this, it's not the most standout inflection point, but we do have these two highs here, this kind of, almost double top area, but with this standout liquidity point. Well, we do have a double top area in the form of this top here, but we have this standout liquidity point, or, fairly standout liquidity point. And then I asked myself, how did we break it? Did we break it structurally, impulsively, structurally, or correctively? And you can see, even on the weekly chart, that's why I like this one. We have a 1, 2, potential 3. And again, we know that we don't always have to tag this upper trend line. We only have to break above this second touch, as it were, and then we can be within our rights, to be looking for a sell. And you might think, yes, but we broke this, we've broken above this. Surely support becomes, resistance becomes support once it's broken above. Well, the reason I have these horizontal lines plotted is not because we trade support and resistance, it's because we don't. And we know that support and resistance doesn't typically work very well. If you want me to test the theory again, the reason we look at these is because what we typically find is price breaks above these, the buyers start buying. You can see that by way of this big wick here. You will be able to on the lower time frames if I just drill down. The buyers start buying, and it fully retraces against them. And I was looking at this one because, look at this. It's a daily retrace. That's why I like this. So we broke this liquidity point by way of a 1, 2, 3, and a 1, 2, 3 with equal spacing at the end of a 1, 2, 3. And then at the end of it all, we get a daily retrace. So that's a candle which retraces at least half of the body of the previous candle. But in this week, it completely engulfs it. So that, to me, is a very, very strong sign that we're headed for more downside. It would have been nice if this had closed just below this liquidity point, but we can't have everything. So that was one of the reasons this is as high up on watch as it is. I like the fact that if you look at the end of this 1, 2, 3, look at the low momentum. Or look at these massive wicks. This, it looks like it's stalling, doesn't it? It looks like it's running out of momentum, and then we get big wick, doji, massive retest. It pushes up a bit more, and then we get another high test and another high test, and then what I would anticipate is a move like this, and that's exactly what happened. It's just momentum, just reading the nature of the market. How did we get somewhere? Not did we get there? How did we get there? And as I said, it breaks above this liquidity point and then it pushes straight back down below it. So with that in mind, I've got the zones marked in again and the zones within zones. I've touched on that earlier. Now, before I started trading the Falcon style, this is the only kind of entry that I took. These were the only entries. I used to, so we're in the amber zone now, so it's not quite as high probability or high value as this. However, I used to place these trades and 80% of them used to play out. When this is the only thing that I used to do, I used to wait for a push down. I didn't know I was in the amber zone at the minute because I didn't understand the zones. But what I now know is that I was trading in the amber zone and I was waiting for a big push down like this and then a flat flag. Look how flat this flag is. If I just drill down, it's flat. It has 2 bottoms, 2 tops. You could argue it has a third top there, actually, which is even better. I hadn't spotted that before, but a 1, 2, 3. It's fairly flat and horizontal in nature. These play out very well indeed. So I've plotted a little in accordance with my forecast. Let's get the forecast out now. put the zones away, forecast. I forecasted, the size isn't really particularly relevant to me, but I forecasted if we got a flag like this with at least two clear tops and bottoms and the last part of the move was corrective, I would look to get short with a risk entry after a phase line break here. That would be my preferred option. And other than this one candle, this is corrective, this last move up. Or the other alternative is if we pushed up very aggressively, then I would wait for a push down on a flag within this larger flag, and then I would look to get short on the break. So if we just zoom in, we don't know the size of these flags, but I can filter these on the 15-minute. I asked myself, can I plot a phase line on the 15-minute? And the answer is yes. So that's exactly what I've done, and I will be moving this across accordingly so that I can get a slightly tighter stop loss. And I've placed my stop loss relative to the size of the wicks on the 1 hour chart to allow for a little bit of volatility. So nice flat flag there. So I will be looking to get. Does it bother me that I can't get my stop loss to break even before this low? Not at all, because I've seen these play out so many times that that one negative is not going to offset what I'll be looking for today, or the quality of this entry, in my opinion. So there we go. We have an entry set, and as I said, I will monitor that and adjust that accordingly after this video, so that I can get a slightly tighter stop loss on this phase line break. So there is, I'm just going to monitor this one as well. We'll get the zones back out and we'll blue flag that, because obviously I'll need to amend that order in a second or two. So weekly chart, Aussie Swiss. Again, same sort of thing. There's a liquidity point there. It's not the most, the highest of all time, but it is a liquidity point. It is there. You'll see it a bit clearer on the daily chart. And then I asked myself once again, how did we get there? We got there by way of 1, 2, potential 3. Again, we know that we don't have to break above this second touch to be looking for, sells. We're more. We just have to break above here. We don't have to get a third touch, rather. That's what I meant to say. So if we just drill down, I like the fact that you can see the scoops to some extent between the points, even on the weekly chart. That's a good sign. And then if we drill down, I like the fact that we've got a middle section here to some extent. So when we get the first inflection point, we push down, we get this 1, 2, 3. And if I wanted to, I could actually plot trend lines across these points. That's another good tick in the box. I like the fact that we've got 1, 2, 3 at the end of this. And then when I see a daily candle which closes just above the liquidity point, that's another reason I put this on watch. This daily candle closes just above this liquidity point. And when it pokes just above and it closes, we know that this is often a trap where the retail traders start buying because they think that, what was previously resistance becomes support. And then, they start piling in. And then what we typically see is what might be happening now is this potential evening star formation where we get the star after which is caused by them buying, and then it fully retraces. We get the confirmed evening star, and then price moves aggressively to the downside. As I said, this is not what we, I'm not a fortune teller. We just see this more often than not. So it's not about being right. It's just about stacking probability on our side. So having an edge over the market, and that's what a lot of people fail to grasp. It's not about being right. I'm not interested in the egotistical side of this business. You only have to go on TradingView to if you want to see a bit of ego, but I'm not interested in that. I'm just interested in trying to make a living out of this. So I like the fact that this move here, what has a equal spacing, that's another tick in the box. Equal spacing often implies that this 1, 2, 3 is often complete. And if we just drill down, another thing I like about this, just spotting these things on the fly, because obviously, there's been development during the Asian session, or just, prices evolve slightly. Look at this last move. Look at this low momentum corrective price action. And then we get this kind of doji stroke high test candle here. This is ticking all the boxes to me, that this is retail traders who started buying above here that are getting stuck. They're getting caught the wrong side of the market again. So with that in mind, and with 5 minutes or so of this video left to go, I will be looking for one of these two things. If we push up to this trend line here, I'd wait for a push down and a flag, and I'd look to get short on the break. I wouldn't be taking a risk entry up here on a phase line break, simply because we know that price could, trickle all the way up to this higher area of value, given that, we've been trading in this range as well. I don't think it's that likely, but to mitigate myself taking an unnecessary loss, I'd wait for a push down the flag, and I'd look to get short on the break of the flag. If we push down from here, if we push down, I'd want to see a clear break of this correction, If we broke just below this correction, I would probably want to see a 1 hour flag. So a more confirmed flag with two clear tops and bottoms that's visible on the 1 hour chart. But if we get a solid push down well below this, I would be more than happy to take a 15-minute flag here, and then I would look to get short accordingly. Again, I'm going to monitor this because I'm just going to monitor this one at the minute because price could drop out early London session momentum, but that's what I'll be looking for from this pair. Hopefully that's nice and clear. Of course, I will stretch the zones up later to reflect where prices move to during the Asian session, but that's what I'll be looking for. So last up is Kiwi Yen, which I have a trade on this one. So weekly chart, similar sort of thing, because we've got a lot of similar to Euro Yen, I suppose. But we have this liquidity point here, and then we ask ourselves, how did we get there? We got there by way of a 1, 2, 3. We know that we don't always have to, tag this liquidity point. We only have to get 90% of the way in terms of the move up, and we've certainly done that. This wick fell just shy. That is a factor in my thinking because, we know that price does like to tend to make its way to the higher area of value as the sellers sit on their hands waiting for it to get there, which often causes an imbalance in the market, which causes the buyers to send it there, and then the sellers start to get involved. But we got there by way of a 1, 2, 3 with equal spacing, 1, 2, 3. And if I just drill down a little bit, we have this 1, 2, 3. You could argue kind of a middle section here if you plotted trend lines across these points. So that's a good sign. Another good sign for me is the fact that we have a 1, 2, 3 just above this second point. First inflection point, move down 1, 2, 3. I can see the scoops between the points. And if I just speed this up ever so slightly. So we pushed up to here, and then we kind of got this this high test was the green flag for me to start looking for sells. So we got this 1, 2, 3 equal spacing, high test candle that pushed down straight below, and then I was tagged in. I'll show you how I got in, but I was tagged in after this high test. So we had a second high test, and then about 6 minutes later, I was tagged in. So this ticked a lot of boxes to me. So I went down and I asked myself, can I see the impulse down on the 1 hour chart? And the answer was yes. So I started to look for entries, and then I found one by way of, if I just unhide the trade, there we go. I got in after this impulse down, this flag here, trickled about for a bit, price trickled around, and then it pushed lower. So we get these, what we typically find is the flags tend to the corrections start to get larger as you get down into the move. And obviously it reflects a slightly less high area of value for a sell. So we got a correction there, slightly larger correction, and then in the amber zone, although we're slightly in the green zone as well, in the amber zone is where we typically see larger flags. So with that in mind, I will be looking for the following. I mean, you could argue that this is potentially a bull flag to push higher, so impulse correction continuation. That wouldn't be unthinkable because, again, we didn't tag this liquidity point, and often we need to see the buyers. We need to see these tagged because we need to see the buyers start buying it, retrace against them, and then the fear that is induced once it travels in the direction for which they weren't anticipating is often what kickstarts the moves to the downside. So when we don't quite tag a high, it is often the case that we will push up there. But my stop loss is now at break even, so I'm not worried about that. This could be a bull flag to push higher, but what are we looking for today is the same as with Euro Yen. If we get a flag like this with two clear tops and bottoms, a larger flag, then I would look to get short with a risk entry after a phase line break on either the 1 hour or the 15-minute chart. If the last leg up was impulsive, I would wait for a push down and a flag, and I would look to get short on the break of the flag with what we call a reduced risk entry. And we call it reduced risk because the move has been confirmed. So once we get an impulse followed by correction, that is confirmation that price wishes to push lower, or as much confirmation as we could wish to see. So I'm just going to monitor this one for now, monitor this every couple of hours or so. But that's what I'll be looking for today, folks. I'm going to monitor my Euro Yen order in a minute and adjust that accordingly. But I hope you've taken some value from this, and I will be back with the last of my videos for this week tomorrow, which will be Friday the 19th, I believe, of February 2021. I shall bid you a good day, a great day, in fact, and I will speak to you again soon. Thanks for watching.